we've actually covered 2 sections now of the chapter, and I'll pause before I get to the 3rd section lecture to go through problems with you. Okay. As a quick review, remember we journal or journalize transactions in a chronological order. Think of that as like us at the Pet Fest. You're scattered all over the place. But then the process of posting to the general ledger allows individual stories for individual accounts to get a snapshot of what's going on. We then bring whatever we do in the general ledger back to the journal with a reference number or whatever account that is. I know we ran out of time yesterday. I'm going to put that on hold because I do want to get into these brief exercises, but typically a 101 would be which account? Cash. Okay, I didn't like how the book numbered it. Seemed scattered in all over the place. And in fact, you guys were the ones that pointed out, isn't a prepaid insurance the least liquid asset? Why isn't that at the end of the list? Again, we'll get into the technicalities of that another time. I'd rather journal, post, ledger, back to the journal. So here's what I plan on getting done. You'll find the details on your textbook page 80 and your workbook page 41 and 42. You guys ready? Let's do this. A little bit of an annoyance. My solutions aren't numbered like your journal, your pages. You know, like I always do this in the workbook as well. And everything's beautifully, you know, line 1, line 2, line 3. My solutions are not. And so that's a little bit annoying to follow, but I'll try to guide you as best as I can. Let's take a look at brief exercise 2.3. It's saying using the data that we analyzed in brief exercise 2.2, journalize the transactions. So if you look back up at brief exercise 2.2, the owner invests, we buy equipment, we pay our rent, and we send a bill. Okay, so those are the things that we're going to now actually journalize in a chronological order. The other thing that it says, you may omit the explanations. I don't want to do that. I want to work through that 4th step in the 5-step process. Speaking of the 5-step process, I want you to write it down somewhere on that page. The 5 steps to journalizing. We date it. Let me ask you this. Did they do that step for us? Yeah? Then what comes next, the debit or the credit? Always the debit first. 2 things. We're going to show the account title and the amount. If we list a debit, what has to follow with it? The credit for both the account title and the amount. Number 4 is the explanation. And step 5 is the reference number, only of which we'll do after we post. Now here's what's kind of annoying about these brief exercises. They don't have us post. We're going to do a full-on problem with that tomorrow where we journalize and post. Okay, you'll get a taste of it today, but not in this order. All right, so on line 1, they have it dated June 1. Why are we debiting cash for $5,000? Let me ask you this. Why are we debiting? It's always first, and we're increasing cash. If you want to have that big cheat sheet available where you highlighted the left and the right and the increase and decrease, you're welcome to have that as a reference. Okay? We spent all of last week doing that, so I feel confident that you can handle that. Okay, if we had a debit somewhere, what does the other half of the equation have to be? A credit. What are we crediting? The owner invested. Okay, the owner invested, but it shows up as owner's capital. Or even when I was doing this, I did Lynch, capital, because that's the owner. Either way is okay. You'll notice the debit is on the left, the credit is on the right. I like how the book organizes that. Debit's on the left, credit's on the right. Okay, and so now we've dated, step 1. We've listed our debit, step 2, credit, step 3. What's step 4? Explanation. Now, mine doesn't give an explanation, it just goes into the next one. But on line 3, let's write an explanation. Remember, an explanation is simply just restating the transaction. What happened in this transaction? Owner invested cash. That can go on line 3. Sometimes you'll see explanations in parentheses. If it's being typed, accountants will put those explanations in italics. It's kind of hard to do when you're writing. And then what would be step 5? They don't even really give you a space for it. What would be step 5? Reference. We'd go out and post that debit. We'd go out and post that credit to 101 and probably 301. And then you see that little column right there that they left for you? There's not much of it there. Let's actually just go in and put 101 here and 301. Even though there isn't really an account title that goes with any of it, I'm just telling you those would be the common ones. I just want you to get in that habit. So far, so good? What's going on June 3rd? What did we buy? Okay, so if we bought equipment, is that an asset, liability, or owner's equity? It's an asset. If we bought it, is that asset going up? So there's your debit. Equipment of $2,100. Tell me again, why are we debiting that? Got more equipment. That asset is going up. I see a debit. What's the other half have to be? Okay. I know what the transaction says, but did we use cash? Would it make sense, though, had we used cash if that would have been the credit? Because that would have meant cash would have been going down. We didn't use cash. We charged it. So when we owe someone for something, in this case equipment, what would our credit be? When we owe someone? Accounts payable. Let's think about the big ALO T for just a minute. Equipment is an asset on the left. If we got more of it, that's a good thing. We know if there's a debit, the other half has to be a credit. But accounts payable is on the right side of the big ALO T. So a credit is an increase. So debits and credits do not always mean increase and decrease. It depends on what side of the T you're on. In this case, the debit is an increase and so is the credit, because we got more equipment, but now we also owe more to whoever we bought the equipment from. Okay, let's do the next little 4th step, even though my answer key doesn't say that. Okay, what did we get? We purchased, and you can abbreviate here, equipment on account. Would it work if we would have had to have a cash credit there? It would have, because that meant cash was going down to get another asset. So that's okay. Remember, the 5th step would be coming in here to do the post reference. There would be numbers attached to that. It's just that we're not going to do that right now. I just want you to see that that's where it would go. The book doesn't want us to do that. The 3rd transaction, which happens to also be June 3rd. $800 cash is paid. I'm going to stop there. Did we get cash or use cash? Well, if cash is going down, is that a debit or a credit? Should I list cash first, though? No, because you always list the debit. So I've got it in my head that I've got a credit. Now I just have to go hunt for the debit. What's the debit going to be? Rent expense. You got it. Does an expense have a normal debit balance? Yes. What I'd like you to write next to rent expense is it technically is an OE, but I'm going to put a mad face by it because it does not follow OE rules. Typically, OE rule-based things have credit balances. Well, this has a debit balance because it's naughty. It doesn't follow the rules. It doesn't follow the normal rules of an owner's equity. It decreases them. Cash went down. If you want to put an arrow going down there. What would we put on that line 9? Paid rent, but add the word expense to it just so you get used to using that. Paid rent expense. The exciting part, you guys, you're doing real accounting here. We're really journalizing. You're using terms like debits and credits. This is the real McCoy. Last one, June 12th. I'm going to pause and ask, are we going in the right order here? We're going in chronological order. Are things kind of spread out all over the place? A little bit. Had we really been doing this full-on process, we'd go post everything to the little mini camps and then come back and tell which number, which account we assigned it to. That full process will happen tomorrow. The book's giving us baby steps. What's happening though on June 12th? We're going to send a bill to M. Rodero for $300 for welding work that we performed on account. Let me pause and ask the question, is cash anywhere in here? Did he give us cash initially or has he paid his bill yet? No. Have we performed a service though? So there's revenue been involved. He has just said, I'll pay you later. Well, when someone owes us money, it's not AP, it's AR. Do we own accounts receivables? We do. You can't touch them. I suppose I could physically go find M. Rodeo and touch him, give him a hug. But we're sending him a bill. We're saying, hey, we did your work. Now you need to pay us. So we see our AR being debited for $300. Before I even move on to the credit, let's talk about this debit a minute. Anytime we debit an asset, it goes up. So what's going up in this case? What's his name again? M. Rodero owes us more. That's why that asset's going up. What's going to happen when he pays his bill? What will be the debit in that case when he pays us his bill? Cash, and then what's going to happen to this asset? It's going to credit or go down. And in that case, that's a good thing when that kind of asset goes down. Okay, so I know we have a debit. What's the other half have to be? Debit or credit? Credit. What are we crediting? Service revenue, because we did something for him. And in this case, we did some welding for him. Are you going to ever see really revenue be debited much? Not really, because we get it. Okay. Are you going to see rent expense credited very often? No, it just happens, and we pay cash or charge it. Let's stop and do that fourth step. Let's write a little description. You probably have run out of lines at this point, right? So just write it underneath on that line 12. Charged AR or service performed. I think I spelled performed wrong. My apologies. And then, of course, we would come in here and put some post-reference numbers, but the book's not having us do that step. If this is challenging to you, erase it and try it all again at home by yourself, and then rewatch the video. Okay, but we're just going to keep going, keep plugging along. We're going to go on to brief exercise 2.4. They don't really give us any space in the workbook, and I don't want you to even have to go to your notebook. Let's just use that bottom portion. Do you see that little bottom portion the bottom of page 41, there's just some lines there down here. That's where I wrote mine. Just use that section. So down there on line like 31, just write BE24. So brief exercise 2-4. We'll just do in that bottom portion. If we read what it says in the book on page 80, it says, Raymond Faust, a fellow student, is unclear about the basic steps in the recording process. Identify and briefly explain the steps in the order in which they occur. We've done this already today, and it's certainly a review from yesterday, but let's put our answers down. A journal, which is the chronological listing of transactions. That's what we just got done doing. There's 5 steps. Try to list them. See if you can do it. That's not the full-on process. That's just the recording in the journal process. But check your answers. See how you did. I want you to star number 2. The debit is always listed first. The credit can be indented. It doesn't need to. It just is more visually appealing if it's indented. Okay, everything that happens here is posted. We'll come back and define posting in a minute. Posted to the general ledger. The general ledger is a listing of each account separately. Spelled that one wrong too. It goes in this order: assets, liability, owner's equity. I'm running out of room. Revenue and expenses. Assets are usually the 100s. Liabilities are usually the 200s. Owner's equity are the 300s, 400s, and 500s. That's where we kind of ended yesterday as far as how things are numbered. And remember, the idea of posting is simply the transferring of info. You're taking what you did in the journal and transferring it over to the general ledger. But then don't forget, you have to come back to this step and post the number, whether it's 101 or 301 or 501. Tomorrow we will do this full on instead of these little snippets like what the book is presenting today. But we're going to keep going. That's basically what we did yesterday in a 2-minute response. Hopefully it's starting to click. Let's move on to brief exercise 2.6. We are skipping 2.5. In brief exercise 2.6, they're saying use the data from 2.5 and journalize. And it's telling you to omit the explanations. I want you to use them. Basically just what we did. I would say the transactions are a little bit more complex because they're introducing some new terms to you. You guys ready to do it? What is happening on August 1st? We're getting cash, but we're increasing capital, okay? Just like the first round last time. We gained cash. Cash went up, but so did owner's capital. Because remember, debit and credit does not always mean increase and decrease. In this case, a debit is increasing cash and the credit is increasing owner's capital. Okay. Did they date them for you again? Okay. The fourth step would be a description. Owner invests cash. The reason I always list cash is because sometimes the owner can invest equipment. Sometimes the owner could invest a computer. You know, so it's not always cash, but in this case, it seems like it is in this book. Okay, what would the fifth step be? Okay, let's put them in because I can tell that it would be 101 and 301. If I was a super big company, it might be 1001 and 3001. Okay, the next one. What's going on August 2nd? August 4th. There's a new account being talked about, don't we? We paid our insurance in advance for 6 months. I think at first glance, students would call it an insurance expense, but it's actually an asset. When you go get car insurance, do you own that coverage? When you go take out homeowner's insurance to cover your house from a natural disaster or a fire, do you own that insurance that's protecting you? You do. It's the least liquid asset because it's kind of hard to recover your money. Okay? So any kind of insurance is actually an asset to you. Your health insurance, your vehicle insurance, your car insurance. In this case, it's just called prepaid insurance. So we're gaining that asset. It's a new asset account that we're talking about here. It's called, so anytime insurance is involved, right now when we're buying the coverage, it's an asset. Later on, you're going to expense out what you use, but that's a whole nother chapter. Okay, what I want you to do next to that, and I'll change pen colors here, it's an asset that is going up for the next 6 months. We're going to own a 6-month policy, right? They wanted it for 6 months? Yes. How did we buy that insurance? Did we charge it or use cash? Cash. So you're going to see a cash credit because it's going down. Basically, one asset is going down to buy another one. That's very common. You often see that when you buy supplies with cash or you buy equipment with cash. You gain an asset, but you use another asset to do so. Okay. And then on this next line, I would say we purchased 6 months insurance with cash. Try the next one on your own. Try June 3rd on your own. I think you can do it. Am I saying June 3rd? I keep looking at the wrong one. August 16th. Try August 16th on your own. And even try August 27th on your own. as you work through some on your own, just remember half of it's going to be pretty easy. If you got cash for something, that's the debit. Well, I know if there's a debit, there's got to be a credit, so I'm going to work through and figure out what that is. Okay, or if you know the credit, then work through and figure out the debit. I always think the cash-based ones are easy because it's used so often. If you're getting cash, it's the debit. If you're paying cash, it's the credit. And then you can kind of piece through the other matching partner, if you will. And just don't forget, we would always do this column after we've done our posting. All right, let's do the last one here of the day. You're going to have to flip in your workbooks to page 42, where it says BE27, where those T accounts are. You can cross that off. We're not going to do that. It's not labeled this way, so please do so. Above where the cash, AR, and service revenue is, I want you to write the word general ledger. Okay. You will need to have page 80 active in your textbook because that is a completed journal. On May 5th, something happened. On May 12th, something happened. And on May 15th, something happened. Those journal entries were done. Now we're going to do the process of moving them from the journal to the general ledger, or in other words, post them to the little mini accounts. Okay? I'm going to flash up answers. Try not to look ahead. Rather, just try to label as I do. Okay? So if I look at the cash mini camp, cash is an asset. Any debit would be a plus, any credit would be a minus. If you'd like to put a little T there to give you that visual representation, great. And the balance will be a debit-based balance. I tend to over-label the mini accounts or the ledgers because I think that really helps students. It melts my heart when you do it on the test and you use all the same labels I do. Okay? What's the next one listed there? An AR. What kind of account is an AR? Asset, liability, owner's equity. Okay, it's also an asset. I'd like you to label it that way. The debit is a plus, the credit is a minus. Again, if you want to put the T there, you can. And then it's a debit-based balance as well. Okay, down here, service revenue. It technically is under the revenue umbrella. Okay. However, it impacts owner's equity. Now, things are different on this side. A debit is a decrease, a credit is an increase. Why? Because we've left the left side of the T and we've moved to the right side of the big arrow T. And this has a credit-based balance. All right. Let's post. Posting's putsy and posting's tedious. One more thing that I want to do. What number, account number, do you think cash would have if we were assigning it a number? 101. I guess I'm a little bit mad at the book that they don't do it this way, but I'm not at all equipped to be a textbook writer. Is an AR, or AR is pretty liquid, could we go knock them down and say, hey, now I could do 102 for that, or I could do 110. I think it's best to set up your account numbers in increments of 10, because then that gives us wiggle room. We have 9 numbers in between there, 8. Okay, so I would opt for the 110 more than the 102. Okay, how about revenue? It's not a 100, 200, or 300. It's a 400. All right, so let's post these. You're looking at the bottom of page 80 to know what to post where. Like the journal has been done for you. Now you have to go transfer the information to the general ledgers. First thing I see, May 5th, we had an AR debit of $4,100. So go find the AR minicamp. Write in your date of May 5th. The weird thing is you don't need explanations here. Eventually you do when we close things or change errors or adjust. That's for a whole nother chapter and a whole nother day. Reference here is J1. What does that mean? Journal page 1. Do you see a J1 on the bottom of page 80? Yes. We had a debit of $4,100, so you put the debit in. Now here's the confusing part. You have to update your balance. Well, it didn't have a balance. So it's like saying 0 plus whatever. That's why I like to put the little operators in here. Okay? 0 balance plus what just happened, 4,100, is 4,100. We wouldn't be done. We'd take that 110, if this was a workbook page, we'd take that 110 and we'd go write it back under the journal post reference column. Okay, you'll see that process happen more tomorrow. I don't necessarily want you writing in your book. Okay, we had a debit, so now we have to list the credits. Okay, it wasn't cash. Which account did we credit? Service revenue. So we go find that minicamp. May 5th. Nothing to explain. It was journal page 1. Same $4,100. It's just that this is the credit side of the debit-credit relationship. That was a credit. It rolled in with a 0 balance, but I look above and see a plus. So 0 plus 4,100 is 4,100. Traditionally, we'd take that number 401 and go put it back on that journal page. First transaction done. We have 2 more to go. May 12th. I see a cash debit. That must mean we got $2,400 cash. So I would go tell that story in that individual little mini camp or in that ledger. May 12th. No need to explain. Coming from journal page 1. We had a debit of $2,400, so I put that in the debit column. 0 was the balance, so 0 plus 2,400 is 2,400. Do you see why I marked these up a little bit? Okay, I hope you appreciate that. I also want to pause and ask you, look at how many points that is on a test, just that line. The date, the reference, the debit, and the updated balance. Okay. I will have students completely forget to put all the references in. The J1, 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 J1s. That's a lot of points. Look at all those J1, J1s. Okay. We did the debit part. Let's do the credit part. It looks like our AR is paying not all of their bill, but some of their bill. The AR was the credit in this case. And here's where you really see how the little accounts or the ledgers work. On May 12th, we had no explanation. Still journal page 1, but we credited 2,400. Well, I see we had a balance of 4,100 minus, so I'm taking 4,100 minus my credit to be the updated balance. Our AR still owes us $1,700. And here's where, when the boss knocks on my door and says, hey, tell me about these ARs, instead of me trying to wade through this huge journal listing where it's all over the place, I can look right at the AR story and say, well, you know what? They've paid about half their bill. And we got to send some AR recovery team there to get more of our bill paid. So this tells more of the story than the journal does. Okay. In the last one, we're getting cash. but this time it's not for someone paying their bill. We performed a service. So May 15th, no explanation. Coming from journal page 1, I had another debit. So are we going to see our balance increase? Yes, because 24 plus 3,000 is 54. Had it been in the credit column, what would we have had to do? Subtract. And then cash would have gone negative. The other half is service revenue. We're just adding to how much money we've made. What do you think? A lot of numbers going a lot of places. My best advice, and I've said it many times today, if you know half of the transaction, you're in good shape because the other half has to be the opposite. If you've got a debit, the other one has to be a credit. And these plus and minuses, although it starts to look like an elementary art project up here, really help you drive your numbers and know your balances. Tomorrow, I want you to peek ahead in your workbook. I want you to go to page in your workbook. Go to page 52 in your workbook. I'm excited for tomorrow because we're going to do it sequentially full on. Can you tell that we're going to do a general journal at the top, and then after every transaction, we're going to post to any one of those general ledger accounts. That shows you the process a little bit better, okay? And then I'm going to have you do one on your own as well. You might say, what's in store for Thursday, Friday? Well, Thursday, Friday, then the last part of the chapter, it teaches you how to do what's called the trial balance. You take all of these balances and hope they all shake out. You take these final balances in your posting or in your general ledger, and you put them into an accounting tool to make sure your debits still equal your credits or that ALO is still in check. Okay? You guys have done a great job. That's where we're going to stop. No homework. Just review it if you feel that would help you.